Hi, this is Zak Mir with the Bulletin Board Heroes here at Box Markets for Thursday, the 21st of April. Starting off with Deltex, where it looks as though we're right on the cusp of the shares delivering a decent rally. We've had a bear trap, that bear trap below 1.1 pence at the latter part of last month. Yesterday gave us a gap close buy signal, so we gapped down earlier this month and then closed above the gap at 1.2 pence. And at the same time, today, last 24 hours, we've also broken that line of resistance from September at and the 50-day moving average at 1.2. And finishing off the whole party atmosphere is this bullish divergence line rising against the falling price until yesterday. The view now is therefore that above 1.2, we're looking for a May resistance line target, resistance line projection target as high as 2.2 pence. Over the next 1 to 2 months, and obviously that would imply there's not going to be any fresh lows for the shares below 1.1. On to Empire Metals, which has proved the bulls correct. Started off here with the unfilled gap to the upside through the 50-day moving average. We then had another unfilled gap to the upside to start this month, and we've hit the target that we were looking at, actually up to 2.2 pence. We actually hit that today. At 2.25, the high of the day. Current view is that above the last peak there at 1.9 pence, let's call it, we could have a fresh leg to the upside as high as 3 pence by the end of next month. But that unfilled gap to the upside with the support coming in well above the top of the gap, a really strong signal last month, along with the rising 50-day moving average. Moving on to stock, which also looks as though it's ready to have a more bullish phase, Galileo Resources. We had the climb from the lows in December within a rising trend channel. The top of that channel at 1.4 pence. So we came close to that today, 1.35 the high. End of day or when end of week close above 1.4, we're looking for 2 pence, which is the top of that triangle from back in June. Hopefully that could be seen over the next 4 to 6 weeks. Stock which I sort of missed out on, well, I noticed it but wasn't expecting it to rise too quickly, is Induction Healthcare. In fact, it's proven me wrong in that sense. So we had an unfilled gap to the upside after a bear trap. So it's a bear trap gap reversal, which is a very strong signal. Got a rising 50-day moving average already through the 200-day moving average as well at 56, and above that looking for as high as 75 pence over the next couple of weeks, and who knows, we get a bit more over the near term than that, given that bear trap gap reversal signal that we've had. If you want to look at Kefi, where the rug was rather pulled from under the bulls, but interestingly enough, we still have a rising 50-day moving average. I think the placing price at 0.8, so we're above that just. The more interesting point to note is that we've got an uptrend line there in the RSI window from October, and we're attempting to bounce off that. If we can remain at that level, 42 RSI or above, and above the 50-day moving average on an end-of-day close basis, see the shares try and head back to fill that gap up to 1.1 pence in the 200-day moving average over the near term. Obviously, there's going to be £8 million worth of churn in there, but we'll see how quickly that is chewed up. Moving on to one of the stars of the recent past, Live Company, which continues to stretch higher. I think we previously had a target around 9 pence, and that's been achieved. Next target now 14 pence, and the more we stay above 10p, which was the initial April peak, the greater the chance of 14 pence over the next month or so. Still got that uptrend line in the RSI window to support the price action. A stock which is not so highly featured here, or hasn't been, is Mobility One, but it looks as though things are about to change in a positive way. Here we've broken the 50-day moving average and that line of resistance from back in November, so we call that 8.9 pence. Above that, looking for the shares to head back towards 12 or 13 pence, which is basically 2022 resistance. So let's see if Mobility can hold above that 8.9 pence area. Onto a stock which I've always had a good feeling about, even though there wasn't much charting data to look at, We managed to break the initial range, 3.4 pence the peak in November, earlier this week, or actually the end of last week. And we also hit our initial target there, 3.8, above 3.8. We're looking for as high as 5.5 pence over the next couple of weeks, and possibly much more than that as well. It's been a decent and extended turnaround for the shares, and we've even had a golden cross buy signal between the 50 and 200-day moving averages at the beginning of the week, so that should also provide some positive momentum and even sentiment. MGC Pharma, the next contender, and here we've had a higher low, and also we've had a gap off the lows, a very strong candle there as well. So it opened at the low, and currently at the high of the day, and also breaking the 50-day moving average of 1.31 pence. End of day close above the 50-day line, and we should be heading up to 1.6 pence at the top of that rising trend channel from back in February, maybe by the end of next month. This stage only back below the floor of the gap at 1.2 pence on an end of day close basis, really delaying the recovery scenario, which has been long awaited. On to Sound Energy, which is another stock making progress towards technical targets. Here we've got 3.2 pence, which was the target we were looking for. I think it'd probably be a bit more optimistic than that now. It looks like a decent chart pattern. We've got the 50 and 200-day moving averages rising in parallel, which is a decent signal. So maybe 3.6 pence by the end of the month could be on the cards, while we hold above the 2.5 pence area, which was the initial April resistance. Stock which has been in the limelight ever since it came to market is THG, and the update today was hotly anticipated, and quite rightly so. The shares are up nearly 20%. What's interesting here is that we managed to break above the 50-day moving average at 97 pence, and above that we could hit the top of that trend channel from back in February as high as £1.24 over the next couple of weeks. Technical breakthrough at Tech Capital today. Here we've got a break of that resistance line there from November at 32 pence and 32.5 pence. Above that, we could be heading towards the top of the rising trend channel from back in August as high as 47 pence, maybe by the end of next month, at least on a 4 to 6 weeks view. Finishing off with a requested stock. Here we've got a yellow cake, which is proving that it's in a hot space, sort of revitalized space. The turnaround here came from that bear trap and key reversal to the upside that we saw at the end of February. Got an uptrend line in the RSI window as well, so that allows some wiggle room down to the RSI 50 level. But hopefully we have seen the low, so the low yesterday, 441, and above that, looking for obviously a retest of the best levels of the year to date, 487, but also the top of the rising trend channel from May last year as high as £6, and maybe that is a decent 1 to 2 month time frame target. This stage only really well below 440 really delays the upside scenario, and ideally an end of day close above the old March resistance of 456 would then trigger the move towards the 600 pence zone. That's it from me today. More updates tomorrow.